Okay. Good morning, everyone. Again, call the meeting to order. Let's have a motion to approve the agenda unless there are any changes.
So moved.
Seconded.
Okay, all in favor?
Aye.
Okay. I guess we didn't have minutes, right, Jewel?
Sorry. No, sir, we proceed with the agenda, the
Okay.
action items and information items.
Okay, thank you.
Thank you.
All right, we'll proceed with the informational and educational items.
Hey, good morning, everyone. I'm here
Morning.
to talk about the January financials. So, you might have it in front of you all, but it's a little tiny on the screen. But our actual revenues are higher than our forecasted revenues by 1 million. So when I look at these, just for your information, just check out the blue lines. And if the blue lines are greater than the green lines, we're looking good. So non-operating revenue is also higher than forecast, and that's being driven by our investment income. And then expenses are on the lower half of the sheet. And you'll see that we are under forecast, under budget for expenses by 1.3 million. Note that these are still draft numbers, especially depreciation, because we haven't closed the books yet. So we're still doing our adjusting entries. Seems really loud. And then on the second page, we're going to talk about equivalent residential connections. So we are slightly under forecast for now, but that's typical of how we roll. We usually catch up by the end of the year. So for the total year, we have 2,645 connections forecasted. And I checked yesterday, we were at 284 total as of yesterday. So we're getting there. And then capital spending, we went over yesterday. I think you all were here. Yeah, down a little bit more. Thank you. So we're right on target, a little over target. Talked about that yesterday. And then on the back, it's just some more charts that break down which funds we're using to spend on CIP. So if it's new growth, expansion of the system, we use availability charges mathematically. And then if it's repair and maintenance, we use our user rates. So that just breaks it down by that. And that's it for January. Unless there's any questions.
One question. Thank you for the report. Is there a formula behind the ERC forecast? Like, how do you estimate that the number X is what you will see?
Yep, last year and this year, we stuck with the county forecast. So from the fiscal impact committee.
Yes.
For new units and new square footage.
Mm-hmm. And then we consult with our land development department who tracks data center progression and kind of make sure that there's nothing outstanding that would cause us to make a difference one way or the other with any data center projections that we see coming.
Okay, thank you.
Mm-hmm.
Okay, thank you. If no further questions, we'll move on to the investment review. Ryan, your last meeting.
Well, I'll still be attending all the meetings. I'm not the one going anywhere.
Last meeting as CFO. I didn't finish. Last meeting as CFO.
So this is for the
I
quarter
hope you're
ending.
not going anywhere.
No, definitely not.
Okay.
This is for the quarter ending December 31st, 2023. We ended the year with a little under 352 million in cash and equivalents. You can see the breakdown that we have between federal government agencies, treasury notes, municipal bonds, corporate bonds, and liquidity. And the liquidity is broken down between the local government investment pool, which we invest in. U.S. Bank holds some money for us, which is our custodian for our investments. And then in Wells Fargo is where we pay all of our bills out of. And so the market trends, again, 351, our average yield was 3.05, and that continues to climb. And then you can see the comparison of the 3-month treasury, the 2-year treasury, LGIP, and then the 30-year tax exempt AAA borrowing rates, which actually dropped a little bit last quarter.
So real quick, so the
Mhm.
treasury notes, what's our mix? Do you have a sense in terms of the dates that we?
Most of it's in the next, either this year or next year, that's rolling off. We don't have too much that's out 4 or 5 years.
Are we mostly doing like 1 and 2 years?
Mostly doing 1 and 2, and that's based on the yield that we're getting right now. It's better to go shorter, and also with our capital improvement plan, we have a lot of cash expenses coming up, so making sure we're keeping stuff rolling off as needed. Yeah.
Is 1 year the shortest that we do?
Typically 1 year is the shortest that we do. We could go shorter, but usually we're trying to ladder our investments when they roll off, and we've already kind of invested in that month
Yeah, makes
Yep.
sense. And do you think any of these corporate bonds would potentially be affected by any of this commercial backed security stuff that's looking ugly?
Yeah, so, we have the option to invest in commercial paper, which we have and have not, and right now we're not. We've kind of gone away from that again. The corporate bonds, the VA code has standards for how quality rated they need to be, and they're supposed to be very high rated. So hopefully not. We're invested in, like Toyota and MetLife and things like that. So in theory, no, we should be okay. But I
Are
can't.
we invested in banks?
That would be the commercial paper, and right now, no, we don't
Okay.
own any commercial paper. Yeah.
Okay, so
Yep.
we're probably good then.
Mhm.
Great.
Brian, Mr. Allen has a question.
Sure.
Hey, Brian, do you have an idea of how much we have maturing this year?
Yeah, it's I'm gonna ballpark somewhere around 100 or so, I think.
Okay.
This year is maturing. And then, we'll reinvest that as needed, depending on what our cash flow looks like.
Do you know what rate those issuances are maturing at? Are they substantially lower than the?
Most of it is substantially lower, yes. Most, I believe, of what's rolling off this year is things that we invested in 2020, 2021, before rates in treasuries really started to go back up. Yep.
So the maturity on those items was 5 years or 4 years or?
Yes, yeah, 3, 4, 5 years, yeah.
So we could, by the end of the year, we could see our average yield up substantially, right? With 100 million rolling off?
Yes, yeah. I think one of the things that just rolled off, was 0.3%. Now we're getting 5. So yeah.
Unbelievable.
The average is
Oh, that's exciting.
Yeah. Yeah.
All right. Thank you.
Great. That's great.
Good.
So yeah, we had 0.3% federal agency roll off at the end of the year. And then a 5.38 municipal bond. So we had 15 million mature. We actually didn't reinvest any of that because we spent it at the end of the year and in January. So that's where that money went. And the LGIP average rate was 5.67%. And so for this quarter, we'll continue to see where interest is and what monies we have available to invest, and then maintain our liquidity as necessary to pay our bills.
Yeah, good.
I know you explained this before, but what is the underlying instrument that composes the LGIP?
Most of it is they do a lot of investments in CDs and overnight funds, and then they also invest in U.S. Treasuries.
Okay.
Presumably it's the CDs that are pushing that rate up a little bit.
Yeah, and the LG, because LGIP actually has 2 different funds you can kind of invest in, and the one we invest in is more of like a bank. We have access to that money tomorrow if needed, while the other one I think is like 60 days or so. So this one is better for us. Yeah.
Good.
And that was
Right.
my last. Yep.
Yeah, right, Sean. Just curious, other than the immediate need for capital improvements for the year, what else goes into the estimate for cash, basic cash on hand or for spending for the year, the immediate cash?
Yeah, capital's the big one. But then we look at, in Sally's report, we look at the budget, and then we have a 3-year look back of when we spend our money monthly. And so we look at that as well as kind of historical spending trends.
Can I jump on to?
Sure.
I believe that was Sean's question. Is there, what I just heard was, look at the CIP, what do you need for capital projects? And then your budget, what's your trend been?
Mhm.
But my question is there any guidance for a percentage or an amount of liquidity that you need to maintain? Like I'm thinking back to the county days and for our capital, for the county's capital planning, it was a debt per capita ratio or some standard. Like, does GFOA have anything for a local utility to say, this is what your range should be? If your overall budget is X percent.
Yeah, we have different financial goals in that your policy have stated. And so when we do the 5-year plan, we make sure we're maintaining those goals. Liquidity, the policy doesn't have a percentage that's set. But like for Wells Fargo, for example, we know how much they charge us to use their banking system. And so we make sure we maintain at least that amount to cover our fees. But there is no formal policy that we have in place that says you need to maintain 10% liquidity. No.
Okay. And then my impression from yesterday's capital CIP committee update and then today's material is you're really not in a position to go looking to be more liquid for some upcoming event because your current planning does not project anything like that.
Right.
So, and that ties into a discussion we may have a little bit later this morning.
Sure.
But we're pretty liquid right now with 92 million sitting in liquidity. So almost a third of our capital position is highly liquid. So
that has dropped a little bit. It's probably closer to 80 now because we've spent some of it, but yeah.
Mr. Chairman?
Okay. Anything else, Brian? All right.
We just have the work plan as the next item.
Okay. I mean, sorry, on the investment review. Okay.
No, I have nothing else. Yeah.
Okay. Move on to the work plan then.
Thank you. I was just going to briefly touch on a couple of these items in the work plan, especially for the benefit of Mr. Yudd and Mr. Buffington. This is pretty much a standard Finance Committee work plan that you've seen in the past. I did want to point out that we have the SAP S/4HANA update scheduled for next month. That could shift to April. This committee saw a presentation on that at the beginning of last year. In April, we work with Davenport, our financial advisors, to present to you our 5-year financing plan, which kind of shows you any need for borrowing money in the next 5 years. In August, we present to you a very in-depth mid-year budget review. Sally works with the other department heads, and they do a very in-depth review of where our spending has been and where we're looking forward to the end of the year, and including equivalent residential connections as well. And then in September, you'll see that you do have a resolution of intent to advise user rates and availability charges. We're on a 3-year schedule for user rate increases. And so we're doing a rate study this year and come to you in September with a recommendation for any possible rate increases for the years 2025, 2026, and 2027. And that's the same for user rates and availability charges. In October, we present to you the next year operating budget. We also have a write-off of uncollectible accounts for any accounts that are over $100. We need your approval to write those off. We also participate in the pooled OPEB trust fund, and one of the requirements of that is to have a citizen member. You have to have 3 members of the board. That includes your general manager, your highest ranking finance person, and then a citizen member. And so we have to ask for your approval of the citizen member. It's always been Mr. Joe Mason, who works for Davenport. And so we'll talk to him this year to see if he's still willing to continue to serve. And then we also will bring to you an authorizing resolution for the standby bond purchase agreement. We have a variable rate debt from 2005, and one of the requirements of that is to have a standby bond purchasing agreement in case the holder of that bond was to tender it, and we would have to pay the principal back immediately. We have it with Bank of America. They would purchase that for us, and so we wouldn't have to pay the principal back immediately. We would continue to pay the principal and interest on the bond.
How big's that bond?
Right now, we have 8.25 million left. It was a $25 million issue. Yep.
So not too big.
Not too big, nope. And then you have a joint committee meeting with the CIP in November to review the 10-year capital spending plan. Capital improvement plan. If there are any questions about the work plan, I'm happy to
Looks
answer
good to
them.
me.
It's good.
I have one question. The rate study,
Mhm.
we're anticipating rate increases. Is that a fair statement?
I would say yes, yes.
Do we think, and you can tell me, you don't have to answer this question, but are we anticipating something similar to what we've had in the past? Or do we think it's going to be higher because of the current inflation environment?
I don't know if I could really answer that right now, but it wouldn't surprise me.
All right. Thank you.
Yeah, I also wanted to raise the same question that Terry just did about the rate study. From the perspective of a member of this committee, I wouldn't want to come to a meeting and have that information hit me.
Yeah.
With, okay, this is what our projection is, and this is what our recommended rates are, without some engagement for how you are developing it, what your inputs are. And then I think the committee can be very helpful to getting ready for the board discussion and also any communication that is necessary regarding that. So I just wanted to raise that possibility to you and to the committee chair and to the board chair, if they can hear my voice.
So typically, it wasn't part of the work plan, but typically we would schedule a special session, a workshop for the board prior to the committee meeting where we present the rates to you to kind of walk through everything and explain in more detail kind of what you're talking about. And then the way it works is we come to the committee and ask for your approval. Then the resolution would go to the full board in October. Then in November, there's a public hearing where folks from the community can come and talk. And then in the December board meeting is where the formal action to implement new rates would take place if approved by the board. Mm-hmm. That's all I have, Mr. Chairman.
Okay. The agenda, what's next on the agenda? The agenda here.
Sorry,
Okay,
sir,
yeah,
it's the
we're going-
closed meeting,
we're
and
in a
if,
closed meeting.
yes, if you would go into closed meeting while we're in open session, ask for the motion.
Okay. You have the motion, Jewel,
Just one second, I will.
so I can read it. Sorry.
Should be under your action item on 5A,
5A.
if you click on that. Mhm.
No, nothing's coming up. Sorry.
That's okay, hold on just one second and I'll pull it up.
We do our summer break in July last year or August? I can't.
So the committees are off in July,
Okay.
and then the board meeting is off in August.
Okay.
Yep. And then last year, I think it was last year, we ended up canceling the August committee, I
That
think.
sounds right.
Yeah.
Yeah.
Mhm.
Hey, Jewel, I'm gonna log off and then try to log back in, okay?
Okay, that's fine. And I'm going to read the motion on behalf of the chairman. Pursuant to section 2.23711 of the Code of Virginia, I move that the board of this authority enter into a closed meeting. The authority for this closed meeting is found in section 2.2-3711, subsection 3. The item to be discussed is Dominion Energy easement requests on the Loudon Water campus. So that was the motion on behalf of the chairman. If we could have a second.
For a second,
Seconded.
Thank you.
all in
Need
favor?
a vote?
Aye.
Aye.
Thank
Aye.
you. And Mr. Kelly, if you would exit this meeting and enter into the closed meeting that I sent you, we'll all meet you in there.
Okay, thank you.
Thank
Joe.
you.